Australia and New Zealand have just given markets a mixed inflation and policy story. Hi, I'm Jack, risk analyst at Eightcap. Aussie headline CPI cooled more than expected, falling from 4.6 to 4.2%, largely helped by government fuel price cuts. However, the trimmed mean edged up to 3.4%, a reminder that underlying inflation is still sticky. On the Kiwi side, the RBNZ held rates steady at 2.25%. But their policy statement was more hawkish than markets expected, and that shift helped drive the NZD higher. Oil slipped again after US Secretary of State Marco Rubio said talks with Iran have progressed, and the US will give them every chance to succeed, dragging crude to its lowest level since mid-April. In the UK, the energy regulator's price cap hike for July is set to push household energy costs to a 2-year high, which could give the pound a short-term lift, though growth concerns may limit that support. Today, ECB President Christine Lagarde is in focus, with traders watching for any signal on the health of the Eurozone economy. Hawkish language would support the euro, whereas dovish comments would likely weigh it down. And into the US, April Core PCE prints later today, with markets expecting it to remain at 0.3% month on month. A hot figure would be greenback positive, as this is the Fed's preferred inflation gauge. That's your market wrap. Stay sharp and see you next time.